Hello and welcome, folks, to this conversation hosted by the Financial Express. My name is Shalin Agrawal. At a time when Nifty is soaring above 18,000 points and Sensex is above 60,000, it seems entire India is in rush for equities. Equity mutual funds have seen record inflows, and India has opened more demat accounts in last 18 months than in the entire history. But today we have a panel that talks us to look for opportunities far beyond India. Welcome to Virtually Borderless Investing. We have with us Vinay Bharadwaj, co-founder Stockwell, Sandeep Bharadwaj, CEO Retail Broking of IFL Securities, and Anupam Goa, Head Private Wealth for ICICI Securities. Gentlemen, thank you for being with us. Vinay, if I could start with you. The question we've been asking is, why to invest in US equities when there are 6,000 or 7,000 companies to invest in India?
No, great. Thanks, Shalin. Good to be part of this discussion. So when you look at the U.S. economy, it's one of the largest economies in the world, right? 35% of the global market cap, from NYSE and Nasdaq, U.S. takes care of the biggest pie, from an overall, capitalization perspective in regards to capital markets. That are like 25 trillion in market cap, but when you look at $3 trillion, right? So when you take, those, you look at the kind of companies which the U.S. capital markets offers, they are like absolutely, diversified. You get new frontier technologies. You can invest in companies such as, Virgin Galactic, Teslas of the world. And then they are like new age companies where you can actually participate in the growth. And the market is like pretty in depth when you look at the U.S. market, right? And you get real diversifications to a large extent. And being an Indian, we are one of the largest consumption market for some of the bigger brands like Apple, Facebook, Amazon, Microsoft. We have been consuming those brands on a day in and day out basis, but we're not able to participate in it to a large extent, right? So keeping all these things in mind, it makes a lot of sense. Even when you are structuring your overall portfolio, to at least have about 10 to 15% diversification into foreign markets. So it just gives you an overall hedge, to a large extent. Be it from a USD INR perspective, there is a lot of advantages from participating in global markets.
2 points. You mentioned about US markets depth. Could you just explain that very briefly? And also USD INR, that can go both ways, is it?
So, from a depth perspective, what I mean from a depth perspective is the pure, avenue of companies you get, right? Be it, financial products, be it ETFs, you have thematic ETFs, you have country specific ETFs, you have strategic, ETFs, you have factor ETFs. There's a overall depth in terms of the kind of products which you can invest in from a US market perspective. So that is one angle to it. And also from an overall, the kind of companies which are listed, right? So for instance, we don't have a pure play sustainable company, ESG kind of, it's pretty hot in the market these days, but we don't have a pure play, sustainable companies listed in the Indian market. So even a company like Renew, he did Renew Power, which did the SPAC and listed in the US market. So you get, opportunity to get like, really good exposure to these kind of companies. That is what when I meant from a overall diversification and depth perspective. You have like ETFs, which are like different kind of ETFs, different kind of financial products, and then you have these kind of companies which are available.
And USD INR, long term, could it go both ways?
So what I am saying is, it is going to be depreciating. I don't see the INR appreciating to a large extent. Again, that's been a trend throughout, right? So it is going to come down, and you need to have that hedge when you want to have your portfolio diversified to a large extent.
I'll move to Sandeep. Sandeep, how's been your experience of US investing with your clients? When did it come about, and how has it grown ever since?
Hey, thanks, Shalin. Thanks for having me on here. So our experience is pretty good. I think as Vinay said, customers are fascinated about the product which they are using, and those stocks are not listed in India. So when you talk about Facebook, Netflix, Google, Microsoft, Nike, Starbucks, Apple, Amazon, and there are many companies which is a daily used by or used by millennials as well as old people. So when they also track the performance, because as far as internet is concerned, after that information is readily available across, and these stocks have given superior returns in past some time. So when you track these stocks and you see that these stocks are performing better, you always have temptation of buying it. So with that thought, we also get into we also got into arrangement of providing US investing options to our customers, and consumers are really appreciating it. And other than that, advantages, people find it, it's a real diversification, though it is also equities, but different countries economy behaves differently sometimes. So Indian market vis-a-vis the US market, it can be a good hedge. So you can call it a geographical diversification of your portfolio when you're investing in outside India. And US, if you look at from long term, past 10 years has given better superior returns than Indian equities, and it is less volatile. It's also not that kind of volatile which we see, and companies have more transparency. So these companies, when it comes to, and if you look at the kind of innovation is happening in West, India always follows. And those companies, as Vinesh talked about renewable energy and few more, those things get first listed there. And if somebody wants to take early advantage of it, it becomes real advantage for customers to get into. So for us, overall, it is a kind of win-win situation where we give give opportunity to our customers to invest in US equities. And we have of lately in past few months, we have seen customers are getting into accounts, and they are buying this kind of stocks.
How many of your retail clients are actually investing in US equities, if you do have that number?
So in terms of customers, we are seeing kind of 9x type 9x growth. So we have started doing in past 6 months, and close to our acquisition, what we do, 10% customers are immediately registering into US equities, and old customers, I see there is a kind of 9x type growth, and I'm seeing old customers are also remitting money and investing in the stocks as well as the portfolios, because there we have also advisor based portfolios available. That also becomes a good opportunity for customers to invest in multiple company together. The US also gives a one good opportunity for customers to invest in multiple stocks and getting a unit out of it. So that's a good option for customers to get invested into multiple assets at the same time. So we are seeing a good acquisition here. Yeah.
I'll ask same question to Anupam as well. Anupam, how has been your experience of US investing with regard to your clients, and what do you advise them?
Sure. Thanks, Shalin. Thanks for having me on this panel. So for us, we've been offering global investing for quite some time, right? The trend that has changed in the last maybe 1 year, 18 months has been really the democratization of it. I've been doing private banking for long, and for the ultra HNIs, this was always a bespoke offering through LRS. What has off late happened, right, is that you see a lot of, and some of the points that both Vinay and Sandeep spoke about, consumers getting exposed post-COVID, with technology, people are seeing that they are, consuming global brands, etc., and they would want to, participate in that. Second, Vinay spoke about the fact that a lot of our clients would want to create a global corpus, dollar corpus for their children, etc., and they want to start investing from there on, right? So it gives you a diversification from a currency perspective, as well as for the fact that given our home bias, where we invest a lot of money in India, but Indian market cap in context of, say, global market cap, there is a strong story of creating a diversified portfolio, and hence we are seeing interest in global markets. What's also happened is that I think, and you would have seen even in the mutual fund space, you see a spate of these fund of funds that are coming in through global tie-up, where, so an overall ecosystem for global investing is getting created. And some of the themes, be it consumer tech, be it, ESG, be it renewables, etc., are all new trends, new themes that people would want to start early and know better than maybe US or maybe some of the other global players. Our offering on the global side, on the digital way, is something that we initiated maybe close to a year. And when we started, there were a couple of things that we had in mind. One is that we wanted to partner, with somebody of repute, somebody with a solid track record, and given that because customers would come on ICICI Direct, and from there they are getting, they are going and investing into the global market. So consideration of a partnership was very important for us. The trust factor was very important. The solidness and robustness of the entire process. Second, we also wanted to ensure that we give a very seamless experience to clients, right? One of the things that we saw out of our own experience of many years, having dealt with, bespoke clients, was that for customers to invest today, how Indian equity investments are. Customer comes on a mobile app and he's seamlessly able to, trade in, 3 swipes. He would want a similar experience. So a single sign-on kind of a model was very important for us. And also over and above the investments bit, remittance, ICICI has this product called as Money to World, which is digitally integrated. So a customer could also do an online remittance and online investment. And the third part of it is that while, we speak about, the Facebook and the Teslas of the world, I think barring very few clients who are extremely sophisticated and understand markets, especially global markets, for them to invest, they also needed handholding. And there we have a very unique offering where, through our tie-up, we are able to offer managed products to our clients through almost 25 top, fund houses in the US. So clients could invest into those managed funds. They could also invest into ETFs. They can invest into bonds, just not about equities, but bonds. And our offering is truly global because it's just not about US, but it's also about, other markets as well, other top global markets. So we started with the US and then we opened up to, 5 other, global markets, Hang Seng, Singapore, the London market, etc. And we are seeing that customer who would maybe want to invest into mutual funds, again in US through UCITS, they are able to do that. So our experience has been very good, Shaleen, and we are seeing a lot of interest. And as Sandeep mentioned, that a lot of these new generation clients that are now coming in the market, given the spate of new accounts that are getting opened, many of them are interested to not only start investing in the Indian equities capital market, but also have a pie in the global market.
One very small point on this: is it mostly push based from you to the clients, or is it mostly pull based from the clients to you? Do the clients ask you that they are keen to invest in US, or do you make them aware? Do you tell them this is a US market, you should invest in that?
So essentially, our entire offering at this point of time is completely digital, as I mentioned, and it is a do-it-yourself model. While we have a tie-up with, on the advisory side as well, as a referral partner, but at this point of time, it is largely client interest coming in. They're opening a India equities account, ICICI Direct account, and they want to diversify into. So is there a communication and education? I think that's a big need of the hour, right? Because while everybody wants to do it, but not many people know how to do it. And once they go into the US market, then how, handholding needs to be done. So I'll give you a couple of examples that how we've approached this, right? Because it's very important that while there is demand, right? And we've seen it in the past also, that clients come on the platform, but once they come on the platform, they get lost, right? And it is here that I think handholding needs to be done for clients. So say, for example, in the offering that we have, right, a customer comes in there are 3 parts to it. First is that where a customer goes in there, over and above the trading part, where he can buy and sell stocks the way he would want, in simple step, he also gets analysis of analyst, right? And you have analyst consensus report coming in. So it gives them a flavor of, what the entire industry is thinking about and what is the view on particular stock or ETF or a sector. The other thing is that we also have something called as a sentiment score, which is nothing but where we collate data from Twitter on a particular stock over the last 24 months. And that gets reflected, for customers, which means that over and above the quantitative and the qualitative parameter, right, they also have a sense on really what's happening in the market and how people are buying and selling for them to take a decision. And lastly, once a customer makes an investment, right? And the portfolio or the stock is there in the portfolio, be it an ETF or a bond or a stock. There is a thorough portfolio analysis out of it. So you have a feature where in one screen they can see the entire portfolio, and there is an analysis on it in terms of how does the portfolio look like.
Sounds good. Actually, I'll on this point I'll go back to Vinay on the how part of it. Anupam, you mentioned people get lost on how to do it. Vinay, could you take us through the process again very briefly on how someone looking to invest in US stocks can actually start doing it, and also briefly touch upon the LRS and limits.
Absolutely, right. So, like Anupam was one big trend which we're seeing these days is, retail participate to global equities to a large extent, right? So, retail investors are coming in this primarily focused on HNIs, and there was a lot of handholding which needed to happen, right from structuring, right from tax, right from everything. Doing your LRS was a big issue back then. So when we started a couple of years back, we kind of democratized the entire process, right? We made the process as easy, as simple as possible. We pioneered this entire concept, and right from onboarding, today a client can come and open an account with us. It takes about 3 minutes to open an account, and your account is activated instantaneously, right? It's a real-time account opening process which we have. And once and again, basic details such as your KYC and your address proof for the stuff which you need to give. And the moment it happens, your account is verified, and it's open on a real-time basis. So the moment it's open on real-time basis, you can wire the money into a US brokering account through the LRS. LRS, any individual could wire up to $250,000 in a physical year. That is a limit which is being set by RBI. So bunch of these banks are offering it today. We have tied up with about 7 different banks in the platform, including ICICI, HDFC, IDFC, and all these guys, where people can come in, seamlessly integrated into the platform and do the wiring basis on which bank offers a better forex rate to a large extent, right? So the platform is like completely open in the sense that irrespective of where your bank account is, irrespective of where your brokering account is, people could essentially open up an account very seamlessly and do the transaction. And we also offer stuff like fractional equities, so people can buy $1 worth of Amazon or $1 worth of Berkshire Hathaway in the company. And even with we have this product called a Stacks, which is like a model portfolio, managed portfolio. We have a very curated list of partners who are managing the model portfolios, and people can essentially start having a kind of a passive investing approach to all these things by investing as low as like $100 in it, right? And they can get a pure diversification, because the $100 could be split across 10 different companies because of fractional investing, which is available. So all these things, enable retail investors to participate in the global market, right? So that's what all of us are trying to do. There is an inherent market demand. When we started, we did get a lot of inbound demand as to how we go about doing it. So we solved for it. And then today we are powering about 7 of the top 10 brokerages in the country, and about 65 different wealth managers as well. So the inherent demand for a product like this is available in the market to a large extent.
Stick with you for a couple of minutes. One of the concerns of retail investors is that investing abroad is not for me. It's for ultra high net worth clients, for very rich people. That's number one. And number two, a retail investor, when there is so much of confusion, sometimes overload of information, sometimes less information available on Indian investing. Where do I find research or guidance to find suitable investments in the US?
No, absolutely. See, when you look at the US market, right, it's a lot more open than the Indian market to a large extent. You have, for example, there's this company called StockTwits, which is like Twitter for investors and stuff. And SEC and FINRA, they said that, that could be used as a communication for, any corporate related communication. That channel could be used, which means people are like a lot more open in terms of governance, in terms of transparency of the company. So, there are a whole bunch of platforms which are like available, right? So you do a Google, you get platforms like Seeking Alpha, Motley Fool, and bunch of these platforms will give you analyst review rating. So it's like lot more matured in terms of giving you the right tips to a large extent. Even if you look at our platform, right? So we have done a deal with a company called Zach. So Zach is one of the very well-known rating agencies in the US. So they give good buy, sell, analyst opinions. We got consensus opinions. We have tied up with a whole bunch of analysts who give you ratings for different stocks. So what I'm trying to get at here is the entire ecosystem has been there in the US for a long time. It's been very, very matured. So for you to get any kind of understanding about a particular company, it's pretty a lot more easier than trying to get it in India, right? So from that perspective, it's pretty open.
What about the size part of it? It's for rich people, not for me.
No, that's what I said, right? The first part when I was explaining it, we at again, the platform which we have built to a large extent is to offer this to retail investors, and we have seen a crazy number of retail investors participating in this platform because of absolutely seamless, no frictionless onboarding, fractional investing. So people can start investing as low as $1 in any particular equity, seamless trading. There's a mobile app, new age mobile app, which is like Robin Hoodish, from an Indian perspective. So it's a simplistic mobile app, simplistic web interface. So we don't come up with the legacies of, a larger international broker to a large extent. So we have designed the entire platform, keeping in mind the new age investors, to make it as seamless, as simple as possible.
Anupam, as a private banker, what would you advise? How much of your money should be in equities other than India?
So see, it is for each client to really, see in terms of his own asset allocation, his own risk appetite, and, the financial journey that one is in. I can only tell you that from a diversification perspective, it makes sense, right? And from a trend perspective, the way we are seeing today, especially the new accounts that are getting opened, broadly anywhere between 5 to 15% kind of allocation is going in. And that's largely the trend that we are seeing. I think one will have to, see it from a maturity perspective in terms of how evolved the client is. There are clients who would want to take a view that, hey, listen, 30% of my portfolio needs to be in US given how the markets are, but that's really for the evolved client, right? For retail investors who are really dabbling into it, I think, it's a process that they will have to go through it, maybe to start with a 5%, and then as they progress and see, their own investment journey, I think they will have more belief in really looking at it. Also, just to maybe, make a few points on some of the your previous question. See, Vinay spoke about fractional shares. The fact that today research is so widely available for investors, right? And something that we wanted to solve for our set of clients. So today, if a customer goes in on our platform, he's not only able to see, fundamental research on a particular stock, he's able to see all the financials. He's also able to see technical, right? On the stock, what kind of buy sell, that's happening in the market for that particular stock. Consensus report from analysts that's available. Also, say, for example, I am somebody who would believe that there are certain companies that I would want to invest from an ESG score perspective. I could actually have those parameters set today in US, where I say that, listen, I will not invest into, these 4 type of companies who do not, or who have a low ESG score. So all of those nuances have been built in our platform, which really then makes it very engaging for the customer. And as I mentioned, that given that clients can invest in fractional shares, and ETFs, right, which are extremely low cost and passives, the approach is that you invest into stocks that you know of, that you're comfortable with, get into then ETFs because that gives you diversification. Start with passives because you're then really, mirroring really the index that's there. So it is low cost and you broadly have a sense on the global market, right? It's easy to track. And then, as you mature as an investor, I think the portfolio allocations can go on.
I would love to talk about passive investing in the ETF, but that would be for another session because that will take another 1 hour of its own. But meanwhile, I'll come to you, Sandeep. Fine. Now, once the investor decides, okay, I have to US investing, I've made a particular allocation out of my money. Now comes the brass tacks. Which stocks do you think are hot right now? Which stocks should an investor looking to invest money right now should start with?
Say, we are seeing good traction in FANG story, so which is more popular stocks, and we see that anybody who's opening, US, who's starting US investing, first jumps to this kind of stocks, which is your Facebook, Amazon, Apple, Netflix, Google, Microsoft. These are the more popular stocks, and it happens when somebody starts for the first time, they end up buying those popular stocks. And other than that, also, if I look at data, I see the sector specific also investing happening, which is more of healthcare and pharmaceuticals, and tech and AI based firms also getting a good traction. So I see overall stock specific FANG story, as well as the kind of stocks, stacks and fractional shares opportunities also available. People try to diversify the sector specific. So that's where the entire traction, Shaleen.
It's interesting you mentioned about fundamental stocks. We only yesterday or day before published a story which interestingly talks about fundamental stocks, Facebook, Amazon, Apple, Google, and Microsoft. These 6 stocks put together make for about 1/5 of the entire US market capitalization and 1/4 of S&P 500. But having said that, is there a risk of these stocks already having run a lot and hence offering only a little upside from now?
Say, if you look at it in long term, because when you are investing in equities, whether it is an Indian context or a US context, it is not a trading point of view. You are investing for a long term perspective. And when you analyze these stocks, even when we talk about FANG, so you are consuming Facebook, and every day there are thousands and lakhs of users, new users are getting into. If you look at Netflix subscription, you look at Amazon, customers base which is getting. So all such platforms are seeing a good customer growth. So in a long term, I don't see any reason where these stocks being such a good fundamental stock will have bigger risk. But yes, in short term, if somebody is looking at it that I should invest in short term period, I want to take profit out of that, may not be the right story for them. But if somebody stay invested, it's obviously a good can be a good revenue generator. And that also applies in Indian market as well. I would also recommend that even a good Indian stocks will not this question may be prevalent for them also.
Anupam, I'll come to you. If you look at profile of, let's say, a Nifty 50 index, it has given a CAGR of, on a TRI basis, it has given a CAGR of about 15% since inception. What is the returns profile in the US market one can expect? What are you advising? Do you even advise your clients to look at a risk profile? Returns profile?
See, again, I would echo what Sandeep spoke about, right? The risk associated with investing into equities.
My apologies. I was talking about the returns here. What are the expected returns? Sure.
So essentially, you see, again, you do not sell on return, right? Because for customers who are coming in, it will be extremely myopic if they are only seeing one part of, the story, which is the return bet, right? You can look at, S&P or NASDAQ kind of funnier returns that are given. But any return that comes in equity market comes with its own set of risk, right? And I think it is important, hence, for people to understand it. The fundamental principles of investing in equity continues to remain the same, right? Be it in India, be it in the global market, right? So if clients and if consumers understand this, I think their experience and their longevity in the market will be far longer, right? Also, they need to think from a slightly long-term perspective, as Sandeep also spoke about, rather than a trading mindset, because markets have run up, right? They actually had run up and there's been a little bit of correction there. But if you look at the macro, right, you look at the unemployment rates that have gone down from maybe a 14% odd to say a 5% plus, right? Vaccinations are happening. Fed has taken a stance in terms of being benign and accommodative. You are US overall, the sectors that they are in, right? It's an extremely efficient market. Some of the industries that they are really the industries of future. So from those concepts, if people think and believe that yes, this is a place that they would want to invest into, and given that they anyways have a home bias of investing into India, so finally, Shalin, the concept of asset allocation will come in, right? And that is typically what we do as wealth managers. What do we do? Depending on the profile of the customer, right, there is a certain level of asset allocation. So say, for example, for hypothetical, a balanced customer, right? A balanced customer, say rough and ready, we are saying 50% equity, 50% debt for simplification, maybe a little bit of gold, etc. 5% gold. Within equity, you have an allocation to India. Within that, are we saying that can you start with maybe a 5-10% allocation to the global market, given that it gives you diversification within the same asset class of equity, but you're investing into stocks that we just spoke about, which are leaders, right? So typically when you invest into India, what do you look at? You look at great management, you look at whether you're in the right sector or not, right? Look at some of the financial parameters, return on capital, efficiency, etc., price to book, price to earning, all of those, right? If those parameters are ticked, then I'm saying it clearly makes a case for consumers to look at and customers to look at investing in global markets, right? Can there be short-term blips? The answer is yes. That is the nature of it. But I think people will have to be patient. And given how the macro trends are, there are historical, empirical data of returns, and I think they will all benefit out of it.
And just to add what Anupam said, if you look at the last five-year returns of even the FANG stocks, last 5 years, I'm not talking about the last 1 year post-COVID. The last 5 year, if you look at Facebook, it has, I think, given more than 150% return. Apple, more than 400% return. Amazon, 300. Netflix, kind of 400%. Google, kind of 200%. Now, if you look at this, but you have to be patient enough to be invested long. So it has a lot more to do with the objective.
So, Shalin, a lot of investors come to me because they get glamorized with the kind of returns that the markets have made, right? But there are events that have happened, right? You look at COVID, how the markets had tanked in India and globally, and then the bounce back. Nobody had thought the kind of bounce back would happen. If you're able to explain the fundamentals of investing in equity and you're able to show the mirror on risk, I think you will be able to manage the entire journey for the customer in a far more efficient way.
When I'll come to you on the part of cost of investing in the US and then cost of taking the money out. By cost, I mean cost of transferring the money, the cost of any other brokerage charges, anything that might actually be added to your costs.
No, absolutely right. So that's a pretty good question, and this is a question which most of the first-time investors, retail investors, they typically ask: what is the cost of investing abroad? Obviously, when we started about 18 to 20 months back, the cost of investing was like pretty high. Brokerage charges were like high, forex charges were high. The cost of remittance, getting the money back, and everything kind of added up for your investing. But ever since that, we have been working very, in a very efficient manner to try to bring down the cost to a large extent, right? So today, what is happening is, when depending on the bank in which you have your accounts, right? So the forex rate is like defined by the bank. There is a slab rate which gets applied to it, so which is like pretty expensive, right? So overall, it can go anyways, from what kind of forex rate which you get and what kind of relationship which you have with the bank, irrespective of what the digital platform is. It could be any one of these banks. So that is a pretty that's a pretty expensive proposition when you're looking at a small ticket size, about $500,000 when you want to wire out. That is something which needs to be considered. From a brokering perspective, I think it's been commoditized, like how it's been commoditized in India, it's been commoditized in the US as well. So right now in our platform, people can trade anywhere between 1 cent a share to even zero commission brokering. It depends on what kind of plan which the user takes in. So from brokering cost perspective, it has been commoditized to a large extent. And when you want to get the monies back, with us, just about $10 per wire out. That's the bank charges, which actually it's a lot more. We kind of discounted for the customer to a large extent, right? The actual cost is about $30 per wire out, but we discounted for the customers, and customer needs to pay about $10 to get their monies back into India. So these are the various different costs. One is the forex cost, and that is something which we are very, very actively working. I think we have a solution. We would have a solution for it by competitive. We are creating this entire.
Could you say that again? When last 10 seconds.
No, what I'm saying is, we are trying to bring down the forex cost to a large extent because we are able to showcase retail forex volume to these banks, right? So once we are able to showcase that, they know that we are able to accumulate a lot of forex revenue for them. So we are able to get a much more competitive rates from various banks. Not just one bank. We're talking about 6 different banks here. So that is something on the work, and we are creating an entire infrastructure for seamless remittance. When I mean seamless remittance, it is like you don't need to go to your bank account, you don't need to go to a third-party site or anything. It completely happens on your, on the platform. The moment you log in, you can just wire the money. So we are bringing down the cost. I think it is going to benefit, retail investors who want to participate, even a very, very small ticket size. So that is something which is actively on works, and I think we'll have a solution very, very soon for that.
So what I want to understand is, do these costs typically get levied per transaction? If yes, so does it make sense to make few large transactions rather than making a frequent small transactions?
Yes, absolutely, right. So your forex, your customer benefits, right? So you can park your money in your brokering account. You get a little bit of returns even for parking your money. And we are coming up with a product called the cash management product. So you can wire the money into the US. Say for example, you want to wire $10,000 to the US. You get better forex rate. You wire the money into the US, and we sweep that 10,000 into a portfolio, a highly liquid portfolio. So you get decent return on that money, which is like lying there. And instantaneously you can liquidate that that money and start trading. So obviously it makes a lot of sense to do it in a large quantums when you're looking to send the money out. But once the money is in your brokering account, then your trade, you can strategize your trade. You can invest little bit on something, do fractional trading. Then the opportunity kind of opens up. But having said that, like I said, even we are trying to make it lot more affordable for a $500 or $1,000 ticket size as well, from a remittance perspective.
I'm sorry about coming back to that again. So, but essentially $500 investment of $500 transaction would not be advisable in that case, right?
It will not, when the $500 investment is fine, but what I'm saying is the remittance starts, right? So what I'm saying is, when you want to send the monies out, minimum it makes sense for you to send at least about $5,000 into your account, and that's pretty much our average account size at the moment, right? So so that makes sense. But from an investment perspective, once you send the monies out, you can invest $500, $10, even $100, how you want to structure your portfolio.
Anupam, I'll come to you. Tax implications of investing in US. Any different from India?
Yeah, it is. So one is that for equities, right? Short term is 2 years. So it is more like an unlisted, right? How you have taxation in India. So it is 2 year, and the taxation for short term is marginal, and for long term it is 20% with indexation. Right? So this is the small change in terms of taxation. And bond debentures and ETFs, it is 36 months. So for equity it is 24 months short term. For others it is 36 months.
Also, even for ETFs, it's 36 months.
That's right. Yeah.
So if I invest in a stock, in an equity stock, and if I take money out after 2 years, I'll have to pay 20%, but I'll get indexation benefit.
That's right. That's right.
Okay. Any other technicalities to consider? And I'll throw this to all three of you. Regulatory technicalities, currency technicalities that one must keep in mind.
No, yeah. So I think as an industry, I think we are all here to solve, the entire client journey, right? It's a fairly commoditized business there in the US, right? Brokerages are rock bottom, right? All of market participants like us have, plans that absolutely suit different type of clients. At one end, it's zero subscription fee. To the other end, zero brokerage, right? The idea is that, and as I always mention, is that if we are able to make the entire client experience seamless, and eventually he's able to so every customer goes with the purpose, right? From a long-term wealth creation, from a diversification, etc. Their own preferences of stocks that they, Sandeep spoke about, FANG stocks. When I was looking at our portfolio analysis, I also see some of our most savvy clients investing into commodities because they thought that, there could be a cycle in commodities. And I saw a lot of people have taken ETFs, ARC ETF and few other innovation ETFs, etc. Right. So from a client experience perspective, how does it open, right? You have an account opening. Once you open an account, you remit the money, right? So that needs to be seamless. Once you remit the money, you need to help the customer make an investment. So give him all the tools that are needed, research, etc. Then he should be able to see the portfolio and analytics on that portfolio. And once the customer decides that, hey, listen, I would want to do profit booking or I would want to take back the money, the entire process of getting back the money should be seamless, right? And post that, from an Indian context, you will have to declare your overseas investments in your tax filing, and and taxation I just spoke about. So it's not really a rocket science. It's as simple as that, and which is why we see so many investors coming in, right, and kind of taking this as a new way of investing.
Sandeep, I'll come to you. Final question. US market outlook, short term and long term both.
So short term, I think markets are already run up a lot, but also I don't see any reason, big reason to have larger correction. There can be, some corrections because that is a part of nature of the market. But in terms of long term story, it's quite intact and positive, both on a US side and Indian side. And when somebody is investing in US and diversifying his money into good stocks as well as good sectors, because it's not only about picking up stocks. There are options available where people can diversify into stacks, into fractional shares, into ETFs, passive investing, or even, if somebody only picks up this FANG stocks and do SIP there for a longer point of time, you have seen the past returns, and these all stocks are good fundamental stocks. So there I see a good positive story there in US in a long term. And short term, one has to be cautious enough. If the objectives are short term, I would not recommend to go for that kind of investment option. Short term, it's more of a technical basis, technical driven. So if consumer understand the technical analysis, and so there enough story within India to invest in and can benefit out of that rather than moving it to US. And if somebody is really targeting, there can be SIPs a way, lump sum can be way where they can pick up and can make their decision based on their objective of the investing. Because what matters when you are picking up US investing, objective has to be very clear, because it is not as seamless that today you buy money, you remit money, and you sell money in the evening and you get back money in the in your account, the way it happens in Indian context. So one has to be very, very pretty clear. But as far as the story is concerned, I see pretty intact.
What are the 3 or 4 things that an investor must watch out for right now when they open newspapers in the morning, when they open news channels? As an investor in the US stocks, what are the things that I must watch out for?
See, as far as US story is concerned, their unemployment rate, you have already seen that this is coming down, and US is opening up. It was never closed though, but it is opening up better, and Fed has already taken the stand. So they're supporting the markets to a large extent. So overall, if you look at these things, it is collectively very positive story. But still, I also want to say that a retail customer point of view, because if the customer who understand investing, it's good. But for retail customer point of view, few things which customers should keep in mind is the currency risk. Because in a longer period of time, if currency risk will not play to large extent, but in shorter period of time, currency risk can be one risk. Liquidity risk can also be if somebody is investing, and so liquidity also keep in mind. And third, the biggest risk one should keep in mind is the taxability. So if you are seeing a profits in your account, it also be mitigated against the taxability. So that is where the broker's role, that is where the platform roles come to the picture, that how we educate our customer and make it completely seamless, that over the transaction itself, over the platform itself, he is able to see the entire stuff very neatly and make a decision to buy with a solid research, and to sell when to book profit, what will be the end gains. So that's where I see we should, we can make retail customer aware about US investing and help him investing for a longer period of time.
Whereas for this final piece, I'll come to you. I thought that active versus passive is something we'll leave for another session, and we will. But if you could give a teaser of that, should one start with active investing or passive investing in US stocks? But maybe just a teaser for the next session.
Sure. So, Anupam and Sandeep were like mentioning, it boils down to, what your end goal is, right? What do you want to achieve by investing in these markets to a large extent? So from that perspective, I think to start off with, if you're able to see, if you understand the market well enough, and if you're able to see an opportunity to make, a buck, right? So then I think, and you understand the market pretty well, then I think then you can go for more and more from an active investing perspective. But when you want to do it from an investing long time perspective, have a pretty decent diversification in your portfolio to a large extent. Then you look at products such as stacks, which we have, model portfolios, to a large extent, create a SIP on it, keep accumulating, these stocks for over a period of time, probably for your kids' education in the US, giving you a hedge, with dollar, for your expenses abroad. So again, end of the day, like Anupam and Sandeep mentioned, it boils down to what you want to achieve. Be it the Indian market, be it the global market, just got to figure out your strategies, your comfort level, and play safe. That's it.
Final word, gentlemen. Sandeep, would you want to add anything to virtually borderless investing?
I think most of the things has already been talked about, but I still want to encourage people to open US, get into the US investing and partially diversify their portfolios and basis their objectives, diversify some percentage in a way of SIPs or lump sum and get exposure there, because in long term, even equity hedges equity. So if Indian equity market as well as the US abroad, I would rather say abroad, equity market are cross analyzing each other. So one can get benefit, and there other advantage of it also. So for example, currency advantage, currency depreciation. So the person who invested 5 years back might have invested at 66, 67 rupees a dollar. Today the dollar is 75. So you get this return itself is a decent return to get into, other than the profit booking. So all the stocks put together, 5 year I talked about the FANG stock. Those stocks have given over 300% return. Other than your more than 15-20% is a currency depreciation. So this collectively becomes a good win back. But the end of the day, objectives has to be very clear. So my recommendation here is start slow and start small, and take a learning out of it, and you will be able to make solid portfolio. But yes, somebody looking at trading options, I would still think that this is not for a trading point of view. It's more of an investing point of view.
Anupam, any final word?
Yeah, so maybe I'll take the passive versus active point. Right, it's something which is, again, we are seeing as a trend in India as well. See, in India, if you look at passive versus active, it is absolutely at the nascent state. But if you look at US market in particular, right, passives have really taken over. It's almost now 50% of the overall AUM that we are, right. So the advantages of passive is that, one, given how efficient the US market is, right, creating alpha becomes difficult for fund managers. And then in that context, people say that, hey, listen, why do I really need to pay active fund management fees? I rather do passive. So it is index hugging. It's easy to invest, and they are low cost products. Within that, there are multiple variants that are there. So say a smart beta as a strategy, your entire factor based investing, your direct indexing where you do indexes, but you have the ability to tax loss harvesting. Right, so multiple ways of investing into the market, and ETFs clearly, as one other tool to invest. My overall comment on the overall, global investments platform is that, given how the world is today, right, and technology plays such a key role of, being connected so much, and for all of us as consumers, wanting to invest into trends of tomorrow, wanting to invest into good quality companies with great track record management, efficient companies. I think some of these global markets offer us this opportunity, especially US, and hence it's a very strong and a compelling story to invest into. Go for the right reason, right? Also work with partners who are strong fundamentally and offer you tools for a customer to really take the right decision. Maybe for people who are not all that savvy, start with passives and then slowly move into active, or go with those large cap well-known mega stocks that FANG stocks or a few others as well, right? But very exciting times for all of us, and I think as a market participant, we are all there committed to improve the client journey and experience.
Thank you very much, all of you. Sandeep, the phrase that you used, equity hedges equity, very nice phrase. I'll use it as a headline sometime, definitely. Vinay, Sandeep, Anupam, thank you so much for joining us, and we hope to continue doing this in further sessions.
Thank you.
Thank you. Our pleasure. Our pleasure.
Thank you.